Welcome back to the channel, Crypto Trend Trader, with a little power hour update. Today is Tuesday evening, and we're just going to run down through some assets. I'm going to keep this video down to 1 hour and just try to knock out as many as I can. I'm going to start off with our typical 10-year and the Treasury note, 10-year Treasury note and US index. And then we will move on through crypto, traditional assets, and see how far we can get with them. So starting with the 10-year Treasury note, TNX. As you can see, we have basically been traveling inside of this channel. We got like the confirmed breakout up here, and we've been basically floating up. Now we're breaking down from this little green line support that we had put in temporarily. That's not a problem. I'm not worried about that at all. Matter of fact, even if we break down through the red support line right here at the top of the channel, as long as we stay above the Fibonacci 618 level on the retracement for this, I'll still be looking good as far as I'm concerned. If we break down from this 618 level at 1.46, then is when I'll get worried about this. But essentially what I'm expecting right now is for us to oscillate inside of this range and eventually make it up to at least 2.08 before we top out. So that's what I'm paying attention to, and those are the key levels for the 10-year Treasury. And as far as I'm concerned, like on the macro too, as long as that is oscillating inside that range, I would expect basically this trend to continue. Next we have DXY, dollar index. Same situation. I sort of redrew this just a slight bit before I had it like so we had kind of broken out of this range, but I'm seeing it a little bit more like this, where this kind of poked out of the range and now we're back inside of it. Once again, I'm not worried about this. This is basically just an ascending, broadening wedge, which is okay for now. What I'm paying attention to is two key levels right here. The first key level being obviously, do we stay inside of this channel? I'd like to see us bounce off of the center line right here, the 236, and then keep going up. But more importantly than anything, I want to see what happens with the 200 exponential and 200 simple moving average. We are technically below the exponential and slightly below the simple, both here in blue. But as long as we stay above them, or at least around them, and can get back above them eventually, we're going to level these two out and then enter into what I would consider to be a confirmed uptrend on the daily, at least on like the semi-macro level. But obviously we're still in a multi-year downtrend. So that's what I'm paying attention to. This was obviously extremely tired. I'm expecting a bounce sometime in the near future. TJD, TDMACD typically bounces this level and at least gets some kind of a pushback up here. The more bullish scenario would be we bounce this area now and continue to move up here all the way up to the 382 at 94.22. But as long as we stay inside of this ascending broadening wedge and we're not like breaking down from here trying to like take out this low, I will still be overall bullish on this, at least on the shorter time frame. So now let's jump into crypto and take a look at what's going on. First, I want to take a look at the Bitcoin chart. This is our standard Bitcoin chart right here. What we're paying attention to right now is obviously, the first breakout of the confirmed range. We got the cross to the downside on the 821, found support and continued up. Second time we averted the cross, found support and continued moving up. Here we averted the cross again and then found support, but we're just basically going sideways right now. That sort of happened right here, but we're going sideways like much longer than we have in the past. So I'm paying attention to this, and we haven't actually printed divergence on the daily on the traditional chart right now, like on the spot markets, but I'm paying attention. We're back inside the bullish control zone, losing strength. It is possible that we basically get another pop up here, develop some bearish divergence, and then sell off, or it's possible that we just continue to lose strength. We do have basically like a high here, a lower high here, and then a lower high here. We have a high here, a higher high here, but then we made a lower high right here on spot markets. So paying attention to that. If we go down to, first let's go up to the weekly. If we go up to our weekly time frame, we're basically consolidating at the top of a range. That's typically bullish and is usually followed by a breakout. But we are losing quite a bit of strength right here. We have at least two, and then including obviously the current week, a third red histogram in a row. That's what I talked about a while ago. We had a bunch of green histograms in a row, followed by 2 reds. Then we had 3 greens and 1 red. And what I said I didn't want to see right here was 3 greens followed by more than 1 red. That's showing me that we are losing strength overall on this market, and that like essentially like the moving averages are starting to converge, like move back closer to each other. So even if we do continue to float up, we're losing strength in this trend, and it's starting to look like potentially at least a micro top. So, and then if we look here also, once again, we have a high here, and then we have a much higher high here on price action. If we look at the indicator oscillator on the weekly chart, we have a high here, and then we have a much lower high right here, which is bearish divergence on the weekly. We're also rolling over now, starting to peak. It's possible we get a scenario like this where we bounce back up here and save the trend, and then we put in a higher high on the moving average or on the stochastic oscillator, but right now it looks weak. We also got the buy signal at the top of a trend, which typically looks bearish to me. So if we basically get the sell followed by the buy followed by a sell then, and then we exit the bearish control zone, this is going to look extremely bearish to me, and I would expect that move back down to the 21 and closer to our low 40s, high 30s targets. So and then going over to, let's go back to the 4-hour now. We did get our 4-hour cross back to the downside here. That looks bearish to me, obviously. We got the hard sell signal. We're outside of the bullish control zone, and we are still underneath the slope line on the TJD TDMACD, selling off with multiple red histograms. Short term, this looks bearish. The main thing I'm paying attention to is, do we take out these previous lows right here? If we take out these lows right here at 57,050, it's going to once again look bearish, as we have a high, a low, a lower high, and then a lower low. That will be a confirmed downtrend on the 4-hour, and I would expect to move back down to our next moving average, which obviously if we take out the 89 here and get a close below that, that's going to take us down to our 200, which we will typically find support at least temporarily. So at this point in time, the 4-hour is looking bearish, and it's looking like we're likely to get a pushback down to somewhere between 55.4 and 56,000. So that's what I'm paying attention to on Bitcoin. Now, if we go over to our futures chart here, I'm on the daily Bitcoin futures chart. And what we have here is our initial high, a higher high slightly, and then a third higher high slightly. And then here, if we look at our indicator oscillators, we have a high here, we have a lower high here, we have a lower high here. That is obviously on the Fisher Transform, triple bearish divergence on the daily. And then here on the Stoch slope, this is a high here, a lower high here. And if this sells off anywhere prior to our previous high here, once again, that's going to be triple bearish divergence as well. And then if we look at the RSI, we have a high here, we have a lower high here, and then the RSI is already rolled over. So again, we have 3 stabs of bearish divergence on that as well. So the Bitcoin futures chart is actually looking more bearish than our spot markets currently. And then once again, if we pay attention here, we have the same bearish divergence taking place on these indicators. This is already rolling over. We're getting the hard sell signal. What we're paying attention to on the weekly is, does this leave the bullish control zone? We're still a ways from that happening, but we could be close to getting a hard sell signal, leaving the bearish control zone. Obviously, we have bullish control zone. We have obviously bearish divergence. And same here, obviously, with the Fisher. We would need a very powerful stab up here. We already have a new high on price action. It's going to be very difficult to get above that high on the Fisher that we put in back here on this push. It is obviously possible, but right now it's looking like 2 drives of bearish divergence on the weekly. So once again, spot market looks bearish on shorter time frames and looks mediocre on daily time frames, but on the weekly looks bad. And then obviously futures looks bad on the weekly and then looks just as bad on the daily as well, actually worse than spot market. So next we have Polkadot. Polkadot got a confirmed breakout to a new high. It's now selling off. You can stay, or I would stay bullish on this anywhere above that 38 level right here, as we would be basically bouncing like the breakout point and getting continuation. But we do have the 821 crossed on the daily to the upside. Everything looks pretty good on this overall. Just a reminder too, as I didn't say it at the beginning of the video, this is not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research, trade responsibly. And then Dogecoin did what we've been looking for it to do. It broke out above that blue trend line, found support, sold back off to it, found support right here. We now have a confirmed candle close on the daily, and I would expect essentially our blue line breakout to take place. I would expect Doge to push back up to its previous high, somewhere in like that 7.5 to 8 cents range. At that point in time, it's going to run into a bunch of resistance, basically at like 7.8 cents. But in the meantime, if Bitcoin keeps just going sideways or pushing up, I expect Dogecoin to be back at all-time highs very soon. Chainlink is next. Chainlink has a confirmed breakout. Basically closed at its previous resistance point where it had like basically the two previous all-time highs. As long as we are above this, obviously still in that trade, still looks good. That's a nice breakout of the descending trend line. If you're in Chainlink, looking good right now. Everything is looking positive. We're potentially going to flip that slope line back over to the upside here, consolidating at the all-time high, potentially even breaking out to a new high, in the next 24 hours. Uniswap, basically at the top of the resistance range. I want to see this thing. It did get the 821 cross to the upside. It is basically at resistance, consolidating at resistance, and just slightly below the bearish parabolic SAR. So, this thing looks like it's basically getting the hard buy, getting multiple green histograms, got the 821 cross. Looks like it's getting ready to have a confirmed breakout to the upside. It is possible it gets rejected and sells off here. If it does, I would expect it to come back down to 26. But overall, looking bullish. Alts are looking actually more bullish than Bitcoin. But if Bitcoin starts selling off violently, I would expect alts to do the same thing. Ethereum broke out to a new high, consolidating above that new high. Essentially came back down to retest it above the 821 cross to the upside in the bullish control zone. Green histograms above the slope line. Looks bullish for now. Definitely expecting a move at least up to the $2,279 range on the micro. But on the macro, I expect a measured move breakout of 2,464 as long as Bitcoin doesn't do anything crazy here. Basic attention token closed at a new all-time high. I expect continuation to the upside up to our next Fibonacci extension target being basically up here at like that $2 range. Does it have to happen? No. Once again, it could fail and sell back off, but it is getting like essentially like market rally highs in the bullish control zone. Has blue parabolic slope, 821 never crossed to the downside. This is one of the most bullish looking cryptos right now. Let's go over to Riot. Riot blockchain, essentially a crypto mining company. It's basically consolidating at the resistance. If we get a breakout of this trend line, I expect a powerful move to the upside, which would correspond with obviously Bitcoin showing strength. Did get the 821 cross back to the upside. It is showing some strength, but overall at this point in time, still inside the descending triangle. I wouldn't get quite overly bullish on this thing just yet. MicroStrategy. It's tough to actually have this as a drawn-in pattern, so I don't consider it to be reliable right now. We are above the 21. We're above the 8. Potentially could be getting the cross to the upside right here. Multiple green histograms. We've got the blue moving up towards the purple, but at this point in time, still not bullish on this bad boy just yet. Could easily just fail and sell back off from this point. I would expect key resistance areas for MicroStrategy if it does push up. We're at the 618 currently. But I would expect it potentially to get a move back up as high as the 0.5. So if we can break above this key level right here, I think 812 will be right around the corner. So could have a nice move coming up here. And then we'll just look at Theta since I've got it right up here. It did find some support right here. It is getting a push back up. It's essentially finding resistance at that key Fibonacci level, the 3.618. If we can get a break above the 3.618, we'll be just below the all-time high daily candle close, at which point in time I would expect continuation. We are bouncing that key area right here. But overall, this thing looks like it's still consolidating to me, but overall looks strong. So if we can break above these key levels right here, basically get above like 1315 or 1320 on a daily close, take out that red parabolic SAR, it's going to look bullish again. So let's move over to, let's do our indexes next. So we have, let's look at SPY first. SPY basically pushed up to a new all-time high, got a slight rejection, but just consolidating here. We do need to pay attention though. This is exactly what I was predicting in these markets or paying attention to if that specifically happened. At this point in time, we basically have a high, a lower high, and then now we're slightly lower. So if this thing starts selling off, which the knife got a powerful move up here and is now trending downward, if this thing starts selling off or continues selling off, we're going to have 1, 2, 3 drives of bearish divergence. Regardless of what happens here, I do expect it to come back down and close this gap at least back down to 400, but potentially retest the breakout level, and then we'll look for continuation. If we get continuation or consolidation above the key resistance, it's going to look like a breakout confirmation and then continuation, and this thing is really going to start moving to the upside. Dow Jones, once again, paying close attention as we did get that breakout slightly ahead of time. We got the retest. We're now getting consolidation, moved up to a new all-time high. This looks slightly more bearish, but overall bullish. There's no reason to get bearish on this thing just yet. We do have a high right here, a lower high right here, and so far a much lower high right here, which we need to pay attention to, as that is once again triple bearish divergence developing. It is possible that we get continuation here and the indicator oscillator comes up to a higher level, takes out these two previous highs, and the bearish divergence would be invalidated. But at this point in time, that is currently starting to print and what we're expecting, at which point in time I would expect a violent sell-off back to the key levels to watch are going to be, can we hold above 32,150? But again, until it develops, until it plays out, until we get a violent move from this, there's no reason to be bearish on this, as it could easily invalidate that bearish divergence. And then NASDAQ is next, IXIC. Paying attention to NASDAQ, we did get a breakout of that descending trendline resistance, left a couple gaps here in the cards, so we could easily come back down to either fill the gap at 13,481 or 13,260. Could go either way at this point in time. It basically looks like we're coming up here to fill the gap that we left behind at 13,812. So I don't just believe in gaps to the upside or gaps to the downside. I think both of them are equally valid. So we did leave a gap open right here at like 13,800 and basically came up to fill it. We got rejected at the 786 today, but we are still looking overall bullish on this. It does look like a confirmed breakout of our descending trend line right here. So that was the move that we were expecting, played out perfectly. What we need to pay attention to now is, does it continue to take strength, show strength and take out the previous all-time high, or does it start selling off here? If it does start selling off here, we're paying attention to, does this line hold, do these previous lows hold, or was that just essentially a bullish retracement of the bearish sell-off followed by continuation to the downside to our 200 moving average targets down here. Next we have Russell 2000, RUT. Russell is basically just, it looks a lot like NASDAQ right now. It got a powerful move back up here. It was a little behind everything else, but came back down, put in a new low after its all-time high. Now we want to pay attention to, is it going to put in a lower high right here and then continue on down to take out this previous low? If it does, obviously going to look very bearish. This is probably the weakest of all of the indexes that we've taken a look at today. But overall, no divergence, even close to showing up in the cards here or anything like that. So this is probably just going to do what everything else does. But again, because of the diversity aspect of this, I would expect this in the short term to be the weakest. But, if everything plays out with the economy and everything reopens and starts doing good as the market is acting like it's going to, I would expect this to strengthen probably equal to, if not more than many of the other indexes. So XLE, energy sector, paying attention to this one. This is basically doing exactly what we talked about. I wanted to see it come in here and take out that previous high, potential shoulder high right here. It did not get up there and then started selling back off. Failed to get the 821 cross back to the upside. The head and shoulders is still in the cards for this thing, but the longer it goes sideways in this range, and if it can stay above like $48 on a daily candle close, I can't help but stay bullish on this and expect continuation. But as far as I'm concerned right now, 821 across to the downside while we're getting a bullish buy, while we're below the slope line and it is red and we're getting multiple histograms, gotta just say that this thing looks like a consolidation pattern, potentially a rejection off the parabolic SAR, and starting to look like this head and shoulders may be ready to play out. And if it does, could take us down to as low as 40, but I would look at that as a long-term macro buying option. Really, I'm going to start really paying attention to this thing anywhere around $44. So ICLN, clean energy ETF, still inside of that downtrend, barely made it above the 21, got rejected. So in between the 8 and 21 right now. Got to be careful on this thing as it could easily get rejected. Continue to sell off and stay inside of this descending pattern. We could make it up as high as like 2650. Still would look bearish, as it would be not like still inside this range. And this would just look like a reflex rally off the 200 exponential. We could easily put in a lower high right here, continue on down to the 200 simple, at which point in time I'd be careful too that this is looking like a micro descending triangle inside of a macro sell-off, basically descending resistance line, and this could potentially be getting ready for a violent sell-off potentially down to like the 1650 range. Overall, I'm bullish on this thing fundamentally, but technically it is looking weak right now. So, all right, so that is it for our indexes. We are making good time, firing through these things, 20 minutes in, looking good. Let's go over to commodities next. Gold and silver have been showing some strength here. Gold got that bounce off of our double bottom right here, put in a slightly higher low, got back inside of our macro green support trend line. We have now green histograms on the TJD TDMACD. We flipped the slope back over blue. We have to be careful though. We did that back here with a hard buy signal and then got rejected after a confirmed breakout right here, but we expect at this point in time 8 and 21 look like they're getting ready to cross to the upside. If we can just maintain sideways price action for another day or two, or get a move to the upside, I would expect us to at least come back up here to like 1785 and retest that 200 exponential moving average. I have to be careful on getting bullish on this thing though, as we do have a negative slope on the 200 simple moving average and negative slope on the 200 exponential moving average. In order to get back above both of them, we need to move back up to like 1859, $1,859 before I can like macro get bullish on gold again. So and then let's look at silver really quick, and then we'll jump back over and look at the rest of the commodities. Silver, once again, doing the same thing, bouncing the 200 exponential moving average, got back above both moving averages. They are both still slightly sloped to the upside in between the 8 and 21. We want to see this thing consolidate or move up above like $25.31. If it stays above there long enough, expect a move back up to like 2650, and then if we can get above 2650 on a confirmed breakout of that descending trend line, I would expect us to move back up to the top of the range as high as $30. But at this point in time, there's still just as high a likelihood of $22 as there is of 30, in my opinion. So, but silver is just going to do what gold does, just a little more intense. So back over, we'll look at UEC next. UEC came up here to that previous high, got the candle close, sold back off to retest essentially like that breakout level. It's finding support here at that previous high. This thing could easily continue to move to the upside. We did confirm a higher high. But like I said in the previous video, this could very easily, like we didn't get a wick high, but we got a daily candle close high. This thing could easily move up to $3.92, hit our Fibonacci extension target, and then get the retracement that we've been paying attention to for. But we are still above the 8 and 21 across the upside. We got the hard buy signal. We're still above the slope line and trending up in blue. So at this point in time, this still looks bullish to me overall, but I am rather skeptical that we could potentially basically be topping out here in the near future, at least on the short term. We do want to pay attention to uranium. We have URNM. This is our uranium mining ETF. Obviously, like the mining stocks are going to do whatever like actual uranium does, but in this case, like the uranium mining ETF is essentially consolidating at its highs, basically closing at its highs, and looks bullish overall. 821 are still crossed to the upside. We look like we're getting ready to have the cross between the Stochs. We do have basically a fairly reliable rejection symbol here. If we start showing weakness on the TJD TDMACD below the blue slope line and then get rejected, this is going to look bad, as essentially if we put in a new all-time high here, or a new trend high right here, we are going to be getting triple bearish divergence on all three of these indicators. So definitely paying attention to that, although obviously I'm bullish on the macro on uranium and energy in general. So AG, First Majestic, Silver Mining Corp, this one, once again, we're potentially coming down here, potentially got the breakout of descending support. We basically hit our target right here, showed a little bit of weakness, but, if we can take out the 1757 level, next key area of interest is going to be up here at $20. If we take out $20, I expect this to go much, much higher, and it's going to look like we just maxed out the 4, which essentially would be the, retest of the 1, which point in time, my macro view on this, which would correspond with silver going much higher, is going to be our confirmed breakout of the massive long pattern that we've been in, and then also the measured move of the triangle that we've been inside of right there. And I would expect this to go up to $36. So essentially a 100% move to the upside. Looking good. This actually looks more bullish than gold and silver do at the time, but we got to pay attention, because if they start to sell off, obviously this will as well. USAS, American Gold and Silver Corp. This one, once again, mining stock, came down here, hit our target perfectly, at $2. basically hit the 382 and is showing some strength up here. We're still in between the 8 and 21, getting rejected by the 382. This could easily sell back off and continue to the downside, but we are showing some bullish signs on the indicator oscillators. And potentially if we can get up here above the 821 and break out from this like 250 level roughly, this is going to start looking extremely bullish, and I would expect to move at least up to the 236 at 282, or potentially to the top resistance descending trend line of like $3.10, at which point in time we'll have to start looking at other targets. Not going to happen overnight, but this thing is definitely looking like it may have bottomed, but it's still a little early to tell, as this could easily just roll back over and start selling back off, and then we'll have to look at lower targets down here as low as like $1.50. Caterpillar, looks like basically we're getting that double top right here, closed around that same level again, got our wicks around that same level again. We basically have hit a key Fibonacci extension target right here. So, as long as we're above the 8 and the 21, still looks good, but we could easily sell back off. If we do get below 225 on daily candle closes, it's going to start to look like we're coming down to like that 214 level, or potentially like 205 level. I am massively bullish on this thing fundamentally and technically. This is like not a massive mover, but overall one of the best looking charts, obviously fundamentally and technically, as if we're going to do all this extra infrastructure and build and the economy is going to do well, we're going to need big diesel powered machinery to do it, and that's what Caterpillar does. And obviously it's American made, so if we're really going to be making and buying American in America, then Caterpillar is a huge name, and I would expect it to do much, much better, potentially go parabolic in the near future. So ACB, now we're into the green sector, different kind of green sector though, not that green energy, that green lack of energy, the cannabis stocks. Aurora is showing a little more weakness than most our cannabis stocks. Potentially could have bottomed here, but again, it's showing weakness. The 821 are crossed back to the downside. It's below the 200 exponential. It's below the 200 simple. Looks like a rejection right now, at which point in time we basically have tagged, all but tagged, the 0.5 retracement for this move up so far, at which point in time I would expect us to come back basically to the 618. So still looking at that $7 range for our top buying opportunity. Also, that would be basically a massive inverted head and shoulders pattern. If we get back down anywhere near like $7 to $5, we'll be massive bullish in that range and looking for an opportunity to buy anywhere in there, as I expect this thing to be back at $18. Retest the neckline, and then potentially get our first trade set up to like $32.94. If we can get this thing anywhere near like $5 to $7 and it moves up to $32, that is going to be absolutely amazing, as that's a 14 to 1 risk reward ratio, and essentially a 377% move to the upside. So definitely paying close attention to the cannabis sector with ACB in mind, although it is showing like more weakness than the other cannabis stocks. Tilray is next. You guys still know, obviously, my key targets down here. It's still showing some weakness on Tilray, but we are above the 200 exponential and 200 simple moving averages. So I'm going to be looking for buys in this 1650 range down to like that 1250 range. That is massively bullish to me. If we find support there, retest basically the top of what I'm seeing as a 5-wave structure developing. If that was the top of our one in like that $12 range, anywhere between 12 and like 16.50, $17 is going to look great for a buy. If we got our 2 retracement here, that was our 3 top. We're about to get our 4 bottom sometime in the near future. We want to see it 100% closing daily or weekly candles above 1125 to stay bullish on this thing. And if it does do that, I would expect it to hit our massive targets up here for a new high in this run, at least, of first trade up would be $107. Second trade up would be $304, and retesting the previous all-time highs. And then based on Fibonacci extensions, 5-wave potential structure, 2.618 Fibonacci extension, and new all-time high of close to $1,000. This could literally be the trade of a lifetime. And you guys know how I feel about the Canadian stocks and Canadian ETFs right now, on these pot stocks, as it's going to be a little while before, at least a year or more, probably more, before federal government and states legalize marijuana stocks. So regardless if it's THC or CBD, it's going to be a while before it is nationally legalized, at which point in time I would expect Canadian stocks to still say massively bullish. And obviously I'm bullish on commodities and this overall sector. So next we have Lemonade. Lemonade is still doing what we were talking about. It broke down from that key trend line right here, came back up, retested it. It's consolidating in between the 8 and 21. If it finds some strength here and gets continuation back up inside this range, I would look at this as a invalid break and then expect continuation back up to some of these previous levels. If it does get rejected and starts to see continuation back to the downside, I would expect a massive sell-off on this thing, a violent sell-off back to like $76, potentially as low as $60, or all the way down to this trend line of like $52. This is at a pivotal point right now. Great point to either take a long or short, regardless of your bias on this thing, as we're at key resistance levels, possibly going to maintain support. If we start to get this 821 cross and move back up here, I'll be bullish on this thing and looking to get back into a long on it. But in the meantime, it looks like it's going to potentially get rejected and roll back over. So yeah, that's it for our commodity sector, and we're going to keep just ripping through these bad boys as we are making phenomenal time. We're at the 30-minute mark. Just a reminder, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. We are at Tesla now. Tesla basically, showing that higher low action right here. We got the exact move back up to the 0.5, got rejected at the 0.5. It looks like we're about to get the 821 cross to the upside. It's not confirmed yet. If we do get that cross, I'm looking for basically the bullish retracement of the bearish dump up to the 618 at $740, or potentially the 786 at $807. We could just as easily have bounced that 0.5 on the macro, came up to the 236, came up to the 382, came back to the 236, and then get rejected back to any one of these previous levels. So what I'm paying attention to now is, can we take out this previous high right here, or do we take out this previous low right here to determine what the trend is right here? But it looks like we got a breakout of that downtrend, and I would expect this thing to stay potentially bullish, at least in the short term, up to 737 or potentially 810. If we do start to sell back off though, roll back over, I want to see like the 382 and this trend line hold as support. And I'd really like to see the 821 get the cross to the upside to stay bullish. But I'm looking basically at 614 to stay bullish in this thing. Which it's already back up at 700. So we really got to pay attention to this and see what happens. But overall, I am expecting a larger sell-off to this thing, but it could just as easily just keep running. And the market has decided it's done selling off. So NEO on the daily next. NEO showing quite a bit of weakness still. Did maintain above the 8, but could not get above the 21. It's a series of lower highs, a series of basically lower lows. We're at that key entry level for potentially a move back up at least to the 618. Retracement of our bearish sell-off, at which point in time I would expect it to just roll back over and continue on. But if this thing starts showing some strength, we could easily get bullish back on this thing and retest the all-time highs. But it is still down like over 30% from the high right here. So we got to be real careful, as this thing was at $3 about a year ago. So we could very, very easily come back down here. This looks right now like a reaction rally off that 200 exponential, followed by another reaction rally off the 200 exponential, followed by a lower high, at which point in time I would expect it to come back down to a lower low and at least touch that 200 simple. But in all reality, this thing looks like it's coming down to like 29.50. So could be a great buying opportunity at 29.50. Could go much lower. Maybe it doesn't get there. Alibaba starting to show a little bit of strength, but overall still not looking great. Basically have broken down from this key green trend line right here. It's starting to really look like we have basically topped out a 5-wave structure. What we want to really pay attention to is, when we topped out that 5-wave structure, are we going to get back down here? We just front ran the 0.5 and our last moving average and bounce that trend line. We are now below that trend line and, basically at the 382. So we technically have a higher low right here. But if this thing rolls back over a lot like Lemonade and gets rejected here and sells off, I would expect us to come down to the 0.5 and my target of $204. It is possible. That was our front run of $204, and we're just not going to get there, and this thing keeps moving to the upside. Much like Lemonade, we are at a key decisive point in the trend for this thing, but need to be very careful long term. very bullish on this thing. And, you know, for diversification into other countries' markets, I think things like NEO and Alibaba are honestly like some of the best, you know, potential Chinese stocks. So, but Chinese stocks are showing some weakness right now. So, Zoom is next. Zoom still inside of this descending trend line overall. Still looks a lot like gold. It's up at that like mid-range, still below the 200 simple and exponential moving averages. The exponential has rolled over. The simple still has a slope to the upside right now. Didn't quite get back down to our target at the bottom of the range, but it's not showing too much strength here. It's still in between the 8 and 21. So we got to pay attention. Is this going to get rejected and roll back over, and then we'll be able to take this trade from like that 270, 280 range, or is it going to show strength and retest that top of the channel? Regardless though, I expect this to operate inside the channel until we get that break. And you know, if we don't get the break, stay inside the channel, keep bouncing it around until we do. PayPal is next. PayPal, once again, looks like we got that descending resistance line break. Looks like it's about to get the 821 cross to the upside. Just want to see this thing stay above $246. If it does, the 200 moving average, exponential and simple are still crossed to the upside. It looks like we bounced these. You know, overall, looks bullish, like a fair retracement off the 236. But we could very, very easily, you know, be about to get rejected off of a key Fibonacci level inside of this range. You know, very, very easily. We're getting rejected at the 382 right now. We could easily move up to 262 or 272, the 0.5 or 618, and then roll back over. But if we take out this level right here, you know, basically where we're at right now, it's going to look like we put in a low, we put in a higher low, we put in a high, we would put in potentially a higher high. I would expect immediately a push up to 262 or potentially as high as 272. If we can get above 272, we'd be taking out this high right here, and I expect a retest of our highs at $309. But don't want to get too overly bullish on this thing just yet, but it is starting to look good, or looking good, I should say. Apple, once again, in a trade on this thing from the channel break, obviously confirmed retest, and is so far getting continuation. We're about halfway up on the trade right there. Already have moved the stop loss to break even. If breaks back down inside of this trend and loses support, I would expect it to take out, you know, this area and basically be a confirmed breakout that got rejected. So we could easily violently sell off on Apple right now. But as far as I'm concerned right now, we should get that measured move at least back up to the 618 and potentially up here to our trade setup of $136. So that thing is still looking good. Has the 821 cross to the upside. 200 exponential and simple are still looking good, and we have broken out of our descending channel. So once again, Apple looking good, but still, you know, obviously in an overall bullish retracement of a bearish sell-off in a macro bull run. Pinterest is next. Pinterest is looking absolutely phenomenal. Anybody who took that trade with me, obviously looking absolutely wonderful right now. Moved our stop loss up to break even, and this thing is already the better part of the way up to the top of our trade. We're already up like over 10% on this bad boy, and well on our way to taking out that previous all-time high. If we do get up there, I would expect some resistance, but you know, it looks like if we get up there, we're going to probably see, you know, massive immediate continuation on this thing. As it is basically one of the more, probably one of the most bullish. We're close up here, closed above the 786, close up here to touching the 886. You know, and you guys know how I feel about the 886. That's like the last resistance, you know, and then obviously it's all-time high continuation. So paying close attention to Pinterest, but looking very bullish. 821 across to the upside. Stochs are across to the upside. We have the we're green parabolic SAR, and we are obviously green with the blue slope on the TJD, TDMACD histograms. So everything looking good on Pinterest. If we take out that all-time high, I would expect massive continuation, potentially up to our first Fibonacci extension target of 98 bucks, 99 bucks. So paying close attention to this bad boy as it is looking good. SMH semiconductors, obviously looking phenomenal. Once again, anybody that took that trade with me, congratulations, as we are up quite a bit of the way. Basically came up and tagged our initial trade setup. Did not even get close to another opportunity to buy this thing on a potential sell-off. But we're basically retesting the previous highs. Semiconductor ETF, massively bullish on this thing overall. We could easily get rejected here, come back down, you know, to our potential entry points. You know, obviously have moved stop loss back to break even on this bad boy. Potentially be looking at it as a buy if we did come down, as long as we stay above that blue slope line. But this thing's looking good. basically found support at the 886. So I'm expecting new highs on this thing, as early as tomorrow. Walmart, once again, looking good at the top of the range of our descending broadening wedge right now. Still expecting a push up and potential break of the range up to $144 to close that gap. If we do get up there, I'm looking at a sell back off down to retest our breakout point. So basically where we're at right now, we could easily get rejected. We could easily get the push back up to 145 and get rejected there, or we could get the push back up, come back down, find support, and get this measure move back up. If we get the measure move, we're looking at $155 and new all-time highs for Walmart. So we have a potential bearish trade here in the works and a potential bullish trade here in the works, looking to basically sell resistance and buy support. Just paying attention to what happens here, as we did lose the 200 exponential moving average, but we're able to regain the 200 simple. We have the 821 cross to the upside. We're in the bullish control zone. We have blue slope on the TJD, TDMACD, and obviously on the macro, bullish on Walmart, as opposed to pretty much everything else in retail. But got to be careful right here, as we are at key resistance. So ARKK, this is innovation. All these are doing the exact same thing. Right now it's getting rejected at the 382 and the 89 exponential, but I do expect this to get up at least to the 0.5 or potentially 618. So paying attention to the upside of 130 to 136, but also paying attention to potentially getting rejected right here and selling back off. So this could go either way for us right now. Definitely looks decent though. Looks like it could potentially get that cross. ARK F, this is the fintech innovation. Once again, bullish on this thing on the macro. Bullish on all Cathie Woods funds on the macro, as they're all loaded up with pretty decent stuff, but a lot of the same stuff too. So got to be careful if you're trying to diversify. Once again, not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. At this point in time, I expect to move back up at least to the 0.5. Potential cross of the 821. Potential cross of the Stokes. Potential cross of the TJD, TDMACD. 55.21 looks like our next target. At which point in time, we would be looking like we're potentially developing a micro uptrend inside of the macro downtrend, inside of the macro uptrend. At which point in time I would look at targets of $57.40 to $60. Looks decent overall. Could get a nice move here. ARKG, genomics. Once again, pretty much the same. Above the 8 and 21, potentially going to cross them back to the upside. At a key fib level, the 382 could easily get our next move back up to the 0.5. I want to see this thing get above $95 and confirm the 821 cross again, confirm the Stokes cross again, confirm the TJD cross again. At which point in time, I'm potentially looking for resistance at $99 to $106, but could just as easily get continuation from there. So looking decent. ARKW. This is our next generation internet ARK fund. Once again, descending resistance. Still technically putting in a lower low. We have a same low right here and still a lower high. If we take out this high right here, it's going to look like a double bottom potential. And if we can break above, like essentially, I want to see it get not above the 0.5 here at 159. I want to see it get above the 162. And if we do get above 162, this is going to look like a double bottom to me, at which point in time I would expect a break above the neckline, which is that range we just talked about, to essentially give us the measure move, which is the length from the neck to the bottom of the W, which would essentially be a pushback up to the previous all-time high of $186. But key resistance here at 166 to 176. So got to be careful we don't run into resistance there and then sell back off and it's a fake out. But I would expect that measure move to get hit of the double bottom W if we can get there. So we'll have to see. ARKQ, this is the autonomous technology. Once again, same thing. Basically have a double bottom W pattern. Potentially if we can break above 88.32, I would expect that measure move to take place. We're currently getting rejected at the 0.5 at a lower high right here with a higher low right here, or same low right here. So we could easily roll over here. Don't want to get too bullish and fail to cross the 821, but we are getting a hard buy. We are above the moving averages and looking to get that 821 cross. Potentially, like multiple green histograms, potentially going to make it past the slope line. Flip it over blue, back up to all-time highs. The measure move is like $99 on this thing. But again, got to be careful of that 618 rejection at $89 to $95 range. if we make it up to the 786. So there we go. A little rapid fire, knocking out all our regular stuff. If you have a request for the next video, or you're going to be able to tune in for our next live stream, that is going to be, let's see, today's Tuesday, so we'll be going live tomorrow night from 8 to 10 p.m. sharp. So make sure you can make it if possible. If not, leave some of it in the comments, and I'll be glad to take a look at any asset that is chartable or that you're interested in being charted on TradingView. Also, take the time to leave any kind of comment. I greatly appreciate it. Positivity, especially negativity. Hey, go ahead. Appreciate the likes, appreciate the time watching, guys. And if you like the rapid fire, coming in here and doing like essentially everything in a shorter amount of time, rather than going live and answering questions and whatnot, or in addition to going live and answering questions and whatnot, let me know. No rant today, no macro picture, none of that stuff. Just going to keep it straight to the TA, fire them off, and get out of here. So there you have it, guys. Thanks for tuning in today. Crypto Trend Trader with your rapid fire Tuesday night market updates, knocking out all of our technical analysis. Make sure you like, make sure you subscribe, make sure you tell your friends, and I'm out of here.